Hello Wolfpack, the entire cryptocurrency market is currently sitting on one massive fence. And why is that? Well, it's pretty obvious, and oh my gosh, I don't want to talk about it again, but I'm going to talk about it again. Interest rates, alright, American interest rates are historically low right now, which is causing high inflation and causing massive market growth to levels of which that are so oversold that even the slightest hint of interest rate rising cause a 15% dump in like 3 months, which is massive for traditional markets, right? So not looking too good right now, and that's going to be in about 3 days or 2 days, depending on where you live, right? 3 days for you mean Australia here, and that decision could potentially determine the fate of the market. And I think that the reason why we're seeing basically nothing happen right now is because, well, the market is waiting and seeing. But the 4-hour chart is quite interesting. I want to look at that right now because it looks like it's actually going to make a move pretty soon, but who knows? It's looked like that for like 3 days. We've done nothing in the last basically 3 days, 2 days. We've done basically nothing, right? And essentially the reason being is because, as I just said, the market is waiting. They're waiting patiently. Everyone is sitting on their hands right now. Not many people are willing to buy at the moment because they want to see what's going to happen with these interest rates decisions, because they know how big deal that could be. It could genuinely put the United States into a recession. Not immediately, but maybe after a few rates rises. Because just remember, the rates rise in March is not going to be the only rates rise, right? There's going to be maybe 3 or 4 of them throughout the year, possibly 3, I'd assume, throughout the year. And each one of those is going to kind of raise the chance of a recession if they're not done correctly, for sure. And so the fear isn't just for the next 3 days. The fear is for the rest of the year for cryptocurrency and also for traditional markets and also kind of for the American public, although they're not very informed about it because, Joe Biden would rather blame it on Russia than on his own policy. And that goes for both parties as well. I really don't care about Republican or Democrat. I really do not care. I think the system is flawed. So I genuinely don't care what political party you stand by. I think they're both terrible. But specifically Joe Biden, his refusal to kind of acknowledge any wrongdoing on the part of his administration, even though, they clearly have sped up the process of inflation here. But regardless, who cares? That's just what it is, and that's what we have to deal with, and that's the reason why this interest rate decision is such a big deal, because we have inflation we haven't seen in 40 years, right? The highest inflation in 40 years, and in order to fight that, we're going to need to raise interest rates, but raising interest rates puts us at, I'm speaking us as in the West, at risk of being exploited by Russia, for example, because we'll have less kind of ability to spend money on things like defense and things like that. But regardless, pretty kind of massive times coming up in the next 48 to 72 hours, and that's why the market's doing nothing. But looking at the TA, because I think we've delved into macro a bit too much, they're looking at the TA. On the 4-hourly chart, for example, we have this consolidation that's been going on for, as I said, the last 2 or 3 days. And what I can see for a change, which is nice to see, is actually some bullish PA playing out right now, bullish price action playing right now. In this entire downwards trend that we've had for the last 3 days, we've seen kind of descending volume. When you see a downtrend, descending volume, when you see consolidation or ascending volume, it means that the current trend is unsustainable, which is currently a downwards trend. And it means that you're probably going to see a break to the upside. We're also on the verge of a MACD cross here, bullish MACD cross, and due to the fact that everything is so close to playing out, and if you looked at Bollinger Bands, you can see the same thing, right? Everything's tightening. I would assume that this move is going to happen, whether it be upside or downside, within the next 4 hours, and it might have even happened by the time this video gets out, who knows, but within the next 4 hours, it's going to play out. Something big's going to happen. Now, we either swing upwards to say 42.5k, through which we'll get rejected from this uptrending red line and downtrending red line and this resistance. And that would be kind of like this. So we'd swing upwards, do a little bit bouncing around, and then get rejected, and then interest rates will come out here, and we'll have to wait and see what happens there. Or interest rates will actually come out over here more like, so we'll probably do something like this, right? We'll wait and see what happens there. Or we could just break downwards straight away. But due to the bullish price action on the 4-hourly chart, I would say that an upswing is probably more likely here. And so that's just a warning to you guys. They're probably, it's probably, I'd give it a 75% chance of an upswing here within the next 4 hours, possibly as high as 42.5k. I kind of did a misanalysis here. 42.5k, we'll probably see the interest rate decision come out while we're up in that region if we do bounce. And so we might be lurking around 42.5k. That's probably the most likely scenario in kind of the next few days here. But ultimately, I think that short-term move, even if it does play out, will be unsustainable, and I think we'll end up plummeting when that interest rate decision does play out, because it's bearish in the market. I think it will act as a bit of a fake out. So a scenario that I can see playing out is we go up to 42.5k, the interest rate decisions comes out, we see a massive fake pump, like just way up in a massive wick, and then we instantly drop back down. That could be something that will play out here. But again, this is kind of all just speculation at this point. I'm saying 75% chance because it's not something that I'm very sure of. I look at the daily chart and everything looks trash. Look at the 4-hourly chart, it looks okay. So worst case scenario for Bitcoin is we come down to this yellow uptrending line at around 37k until the interest rate decision comes out. Best case scenario is we go up to 42k. That's how I'm seeing it for Bitcoin right now. But ultimately, I think regardless of the situation, I would see this as an ascending wedge formation. But I would say that is going to break to the downside just due to the large quantity of resistance we're seeing above. I mean, look at 42.5k. You have 3 separate diagonal resistance lines guarding that region. You have the one starting in December 2020 heading upwards. You have the one starting in November and the one starting in later in November or December, all heading in towards 42.5k. And if we were to reach 42.5k within the next few days, we would be facing not only 42.5k as a strong resistance, which it actually is very strong. Okay, it's extremely strong. 42.5k held resistance in multiple points of the chart that I'm circling right now. Okay, so extremely strong resistance. Not only would we be facing that, we'd also be facing these 3 strong diagonal trend lines. And so I see it as an extremely unlikely chance that Bitcoin is going to break 42.5k in any meaningful way other than a scam pump, right? So 42.5k, it just seems like there's no chance of getting above, in my personal opinion. As I said, other than a scam pump caused by the interest rate decision that will last like a few hours at most. But yeah, I don't see 42.5k breaking at this point in time. And I think that we could get there, as I said, but I don't see it breaking. I think that the most likely scenario by the end of the month is that Bitcoin is going to be down in the 30k region, and that's going to be in the next 17 days. I think that's pretty well a good assumption to make. I mean, the end of the month here is in the 31st of March, and that's going to be, as I said, around 17-18 days. It's going to be here on the chart. So we could be in the 30k region, or we'll probably be heading down towards it. What I can kind of say pretty confidently is we'll probably be breaking this downtrending line, or this uptrending support line by that point, and heading down towards it at the very least. I don't see any kind of bullish price action here playing out. The only thing I can say is that, well, if the Federal Reserve, by some stroke of the imagination, decides to keep interest rates the same, which, it's possible. I mean, given the Russian-Ukraine situation, it's possible. Then we could see a little bit of a bounce, because that means there's going to be much less strain on traditional markets, much less strain on something like the DXY, and that would actually probably, drop down at that point, and that would cause a little bit of a pump on Bitcoin. But, if they raise interest rates, it's pretty sure that, it's pretty much the nail on the coffin for Bitcoin. It looks like we're probably going to be going down. To demonstrate how on the fence we are right now, this is the total cryptocurrency market cap. And this kind of plays into the short-term scenario where I think 42.5k is more likely, because we're on support here. Usually when you test support, you go up to resistance and then reject back down. Okay, so even the total cryptocurrency market cap is suggesting that, hey, we could potentially see a short-term bounce here, and that would probably be the most likely scenario. But ultimately, we're in a symmetrical triangle in a sharp downwards trend. You could call this a bearish flag as well. And that means that we're probably going to break to the downside in the longer term scale. But giving you an idea of how much indecisiveness is in the market right now, this is every single dollar wrapped up in cryptocurrency right now is 1.71 trillion. And that is on a triangular formation on support. So, much on the fenceness going on in the market right now. Really not much decisiveness going on. And looking at something like the DXY, which is very reverse correlated to Bitcoin, if Bitcoin goes, if the DXY goes up, Bitcoin generally goes down. This is just broken out of a 21-year pennant formation, or 21-year symmetrical triangle formation, I should say. And that's obviously very bullish for DXY, which is obviously very bearish for Bitcoin. It's also broken a ascending wedge to the upside, which is unlikely, but it did it. And that means that, Bitcoin's going to be on some extra strain here. And if the Federal Reserve raises interest rates, this thing's just going to pump up further towards the next resistance. And then Bitcoin's going to be put onto, much more strain. So ultimately, I guess what I'm saying is that, in the next, say, 2 to 3 days before interest rates come out, it's extremely plausible that we will see a bit of a bounce on Bitcoin up to 42.5k. But regardless of any situation, we're probably going to be breaking to the downside. And I honestly, you know, I wouldn't even bet on the fact that we're going to go break upwards here, because as you can see on this chart, we have the 50 and the 21 EMA right now rejecting us from around 39.3k. So it's a bit of like a guess, but I suppose that's what all trading is. You know, I would say it's most likely we break upwards, but I really wouldn't be willing to enter any trades right now. There's so much uncertainty in the market, and as we're approaching these important dates, literally anything can happen, and it doesn't have to be rational. And so that's why I would not be trading anything right now. Not any altcoins, not any Bitcoin, nothing. I'd be waiting for this decision to pan out. I think we're way too close to the decision in order to be trading right now. Way too risky. So I guess to summarize the video, don't be surprised if we jump back up to 42.5k. If we get there, we're most likely going to be rejecting. And in longer term, we're going down. And look, even if we break 42.5k, which would be pretty bullish, right? We still have the top of this wedge formation and 45.5k lining up with each other. So we've got two strong resistance zones above, and we've got a weak support below. That's what I'm looking at for Bitcoin. Doesn't look too good. Thanks for watching, guys. Hope you enjoyed. Please stay safe. Please, to the best of what you can do, it is my advice to you, or it's my opinion, that you should not be trading right now. Just wait a few days. Just wait a few days. Wait until everything plays out. There's going to be massive volatility. It's going to, you know, this kind of thing is invented to scam you, right? They may make this on purpose to scam you. The market makers love this kind of stuff, right? Look at CPI. Let's go on the 4-hourly chart quickly. Let's look at CPI numbers, right? Look at this one candle here on March 10th, 23, according to my price chart here. Look, we pumped up from, and if I zoomed into the hourly chart, it'll show you the same thing, 38.5k to 40.4k in literally under an hour, and then went all the way back down, right? There's no reason for that other than to scam you, okay? From a perspective of an investor, there's no reason for that other than to scam you. This interest rate decision is going to be no different. There's going to be massive volatility, and you should be waiting it out. Wait at least 24 hours until it's done, and then you can start to think about entering trades again when the market stabilizes. But just know that whatever the pump is, whatever the dump is, whatever it is, just be safe, because it's probably not going to be real, especially if it's within like 12 hours of release. So thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video.